I made over 100,000 green soldiers by trading Nvidia options. I used long dated options called LEAPS, and in this video, I'm going to show you how you can literally 10x your money or more based on Nvidia's past. If it continues to go up as fast as it's been, then you can turn $10,000 into like literally over $1 million using this strategy. This is going to be the quickest and most effective guide with examples, and I will be covering why LEAP options, how to place them, the strikes that I'm looking at for Nvidia right now, and we're gonna go from opening, managing, and closing a successful trade. All right, let's get into it. Let's not waste any time. So real quick, Nvidia is trading at $145 per share. This stock has had tremendous performance over the past 1 month, and a LEAP strategy is very strong for a stock that has an uptrend. And the reason why you want to trade LEAP options is because they give you leverage. LEAPs can offer very high returns because you own essentially 100 shares of stock. A LEAP option is buying a call option. A LEAP option, the reason it's called a LEAP is it's a long-term call option and has way lower capital. Okay, so instead of buying, Nvidia for $145 per share and buying 100 shares, which is going to cost you $14,500, I'm going to show you an example right now that's going to cost way less. So I'm going to go into Nvidia. All right, go to trade Nvidia options. And now I'm going to buy a call option and show you the difference. And the difference is going to be staggering. Like I'm telling you right now, it's a staggering difference in terms of capital that you have to put up. Now, a LEAP option is a long-term option. All right, so a long-term option is going to be something around the 1 year mark. So I'm going to go for June 18, 2026. Now, we're going to go into a LEAP option. And by the way, I recommended this LEAP option to my Discord community last week. Okay, it was a 115 that I recommended. So if you look actually right here, I recommended this in early June. Nvidia was still trading for around the 135 area, 136 area. So far, we're already up $9. And let me tell you, this $9 is a lot because we're up $9 on premium that was around $40. Meaning, right? Because you have to put up way less capital, as you can see here. Okay, so we put up about $4,000. We're up $9, which is like 20% return in a week. We're up 20% in a week. So if you have a $30,000 portfolio, you would be up $6,000. If you have a $300,000 portfolio, you would be up $60,000. Absolutely insane returns. Now, here, I recommended the 115 because it had a 70 delta, right? I say in all my videos, if you watch any of my LEAP videos, I have several of them on the channel, I will always say 70 delta is the way to go, all right? And now it's at 79. So yeah, we've made money on Nvidia, and this LEAP option right here gives you the upside and the momentum of Nvidia. Okay, so it's just a call option, and I go for 1 year options because they're safer than short-term options. I'll show you an example in just a moment, but a long-term option loses way less time decay. Okay, and that's very important because if you want to make money bicep over tricep, then you cannot be losing money left and right, making mistakes. Okay, you need to be very sure because consistency is how you scale and grow. And if you want to become a millionaire, it is through consistency. It doesn't happen overnight. It's not a get rich quick, okay? Although LEAPs are super attractive, still it takes time and consistency. Now, I personally go for in the money LEAPs because they're safer. Yes, they're more expensive. So for example, like, yes, the 115 is more expensive than the 116, and the 116 is more expensive than the 117. And you can see that this trend continues. The higher you go up, this premium right here, the ask price, becomes cheaper. And it's becoming cheaper because there's less of a chance that Nvidia is going to, be hugely in the money as you continue to go up, right? So if I go to like 200, okay, you can see here that, yeah, the premium is a lot lower, and that's because the chances of Nvidia going to 200 is lower. And by the way, if you're wondering why is the premium lower, even though the option is in the money, like this is an in the money option, it's lower because it has less in the money value. So it's not in the money as deep as the other ones. So the 140 is $25 less deep in the money than a 115 call option. So yeah, it's very important to find that balance because what you're looking for is you're looking for a long-term expiration. That's like one criteria. Number two criteria is you're looking for an in-the-money option because you're looking to replace stock. Okay, this strategy is good because Nvidia has high momentum, and if you want a big return, you're looking to leverage that return, right, by putting up less capital which is a leap option. You can also go for an out of the money leap option. However, they are going to have less sensitivity. So for example, like a 115 call option right here, when Nvidia goes up $1, you make 80 cents on this option, right? So when I picked the 115 last week in my community and Nvidia went up like roughly $9 or even $10, we made about $7, okay, in total value. And that's because we're deep in the money, okay, and the delta is high. Now, if we had an out of the money option, say that we had like a 150, well, we would be up kind of like less money. That's because the delta was much lower. And this delta has changed, so the delta may have been 0.5, for example. The delta increases as the stock increases and goes up in value. Now, before I go over another specific example using Nvidia and which leap option I would buy right now, which expiration date, and how to manage that trade, I want to talk about why Nvidia. And that's important as well, because when you buy a leap option, the stock selection is very important. So real briefly, I have 3 reasons. The reason number 1 is the Blackwell GPU upgrade cycle. Nvidia's new Blackwell architecture is now ramping up, okay? It's powering AI supercomputers and inference systems, has already basically driven a 73% jump in data center revenue. And that is the key number that I'm looking for when I am personally investing in Nvidia. So it has enhanced performance and full adoption in H1 2025 signal, and it has, whatever, you can just skip that. Now the second reason is the China chip workaround. So if you have Nvidia stock, most likely you already do, or you're thinking about buying the stock or adding to your position, you know that China is kind of like a thorn in the hand for Nvidia. But despite strict export controls, which cost $4.5 billion in the last quarter, now Nvidia is engineering a crippled H100 variant in its tailored Blackwell chip, kind of similar to the B40, for the Chinese market. So as early as June 2025, which is right now as I'm making this video, they may start to get more chips into China despite all the politics and issues. I really think there's going to be a workaround because there's just way too much money. It's a $50 billion AI market, so per year. So I mean, I think that the stock will go up and that's going to benefit the leap option. Now in terms of revenue and compounded annual growth rate, and a little bit more about the valuation, with the sustained high teens to 30% plus revenue growth and AI-driven demand, Nvidia trades at a very attractive forward PE ratio, and that aligns very well with the growth trajectory. So as it grows, obviously a leap option is going to have a huge benefit because it is a long bullish strategy. So if we look at the future earnings of Nvidia, it looks very good. And the future PE looks very good because it already has a reasonable PE, and with the growth, the PE ratio will only go down. And last but not least, in Q1 fiscal year 2026, which is basically the period that was just ending, Nvidia reported 69% year-over-year revenue surge to $44.1 billion, with data center up 73% to $39.1 billion. All right, with those 3 reasons out of the way, I want to talk a little bit more about the technicals of Nvidia and where I see it, okay? And by the way, we're going to talk about managing the strategy using this quick chart in just a second. So look, Nvidia 145, you can see how it's heading towards the top of its Bollinger Band. That's typically kind of like a warning sign because you don't want the stock to be at its peak, but Nvidia is kind of an exception because the valuation is good and the news is just very positive and the trend is also clear, like AI is dominating. So in the second half of 2025, we're likely going to break out of the current Bollinger Band. We're likely to break out to new highs, and I suspect that the stock can be a $180 stock. So baking in my expectation of this year being 180, okay, and by the way, probably next year will probably be over $200. Let's just talk about 180 this year, all right? So if I go back here and we go for let's actually pick a 120 call option because we kind of missed out, or if you're not part of Discord, you kind of missed out on the 115. We're going to readjust and recalibrate to 120. All right, we're going to go up by $5. So let's pick the 120 right here. This has a total cost of 42. Now, the reason why I'm like looking into the 120 now, a week later, it has that kind of lower delta of around 0.7. I don't really want to be at 0.8. I just feel like 0.7, based on research that I've done, worked at Goldman Sachs, 0.7 is really that sweet spot for me personally. All right, so 120 would be kind of the adjusted new strike price that I would pick right now. The bid-ask spread is incredibly good, 41.90, 42 on the ask. Great. It's very tight. It's only a $10 difference. And we have lots of open interest. All right. So how would we like kind of profit off of this position? What does that profit look like? Well, we can see here that our break even is around $162 on Nvidia. All right. So if Nvidia goes to 180 this year, okay, this option will still have time on it, okay? It's still gonna have time, and it's actually gonna have a lot of time on it, because in this presentation, this is a course that I have coming out pretty soon, you will see real quick here when I go to the time decay that there's still kind of not that much time decay that has occurred, because if this option is expiring on June 18, then there's still like over 6 months. So you can see here how the time decay is still going to be pretty much like not that much, okay? By the way, I have a free course coming out on YouTube pretty soon on LEAP options, so subscribe to this video so you can get the notification when I come out with that video in the next few days, all right? And if it's already out, then you can find that video in the description. Let's go back here to managing this trade. So essentially, the time decay will still be intact on this trade. So if Nvidia goes to 180, you have to realize that this chart isn't fully correct, because it's at expiration what will happen. In fact, you will have a bigger return, because if Nvidia goes to 180, then it will officially be $60 in the money, because 180 and the strike price here is 120. It will be worth $60 intrinsically. Intrinsically means like the actual in the money value, it's up. So 180 minus 120 is 60 bucks, okay? Well, that's cool. We're paying 42, it's 60. However, it's still gonna have a ton of theta. And let's kind of predict, I'll show you how to kind of predict what it'll be worth. Right now, this 120 option with 120 strike price, Nvidia is at 142. It's in the money by 22, but the option is worth 42. And that basically means that it's $22 in the money. We have $20 worth of time value, $22, it's legitimately in the money. So what will happen when Nvidia goes to 180 and it's later on in 2025, and let's say that occurs, right? It's not a guarantee, but let's say we're at 180. We still have a lot of time on the option. Here's what's going to happen. It's still going to be about $20 worth of time value. It's not really going to change. That is the benefit of a LEAP option. We have enough time, especially if volatility even increases a little bit, there may be even more time value, okay? So let's just say all things even, the time value will be about the same, okay? Meaning we're still gonna have $20 worth of time value. So if Nvidia goes to 180, okay, we are going to have $60 of intrinsic value, all right? And we're still gonna have the $20 worth of extrinsic value, or the time left, okay? And to recap, again, if you're a little bit confused, let me recap real fast. A 180 call option will be $60 in the money. There is time value to all options. Currently, our time value on this option is about $20. And I suspect it will be about worth the same later on this year. So now we have a new value. We have $60 of value intrinsically, and then we still have our $20 worth of value. So our option will be worth $80. This means that within 6 months, you will double your money. You will go from $40 to $80 within 6 months. Okay, or less. Nvidia may reach that point or less, right? So using LEAP options with a high momentum stock like Nvidia, you can double your money in less than a 6-month period, which means that if you do that multiple times a year, all of a sudden you're getting to, if you do it 3 times a year, you're getting into that 10x category, okay? And on a bullish stock like Nvidia, believe me, over time, if you pick a good stock that will continue its trend, you can definitely get a 10x return in a single year. And obviously, in a 5-year period, you are literally looking at potentially like a 100x return. So using LEAPS is how you can literally turn like a small amount of money into a ginormous amount of money on a proper stock. And that can be Nvidia going forward into the future if it has the same returns that it has had. Again, that's a little bit less likely, but if it does that, you can literally turn $10,000 into $1 million, right? But of course, I mean, if we just turn 10K into 100K, we're happy too, right? We're happy to 10X our money as well. So here's how you can manage this trade, because nothing in life is guaranteed, although this is a pretty high probability. Here's what you can do in the short term. If you're newer to options, if you're more of a beginner, I really help beginners kind of ramp up, learn all the foundation, and scale their portfolios. I work with them one-on-one. So if that's something you're interested in, go ahead and check out the first description. We have a free consultation. You can learn about the pricing and the structure of my coaching, and I think we can figure something out for you. We do custom one-on-ones, okay? Look, here's how you manage this trade. If you buy a call option on Nvidia, for the most part, you don't have to do too much. If the stock performs well, if Trump doesn't crash the market, if the Fed doesn't crash the market, if politically we don't have issues, and the economy just continues to grow and AI continues to grow, which is my belief and my base case of what's going to happen in the stock market, then you don't have to do anything. All you have to do is completely chill out. The LEAP option will literally double, and you will take profit later on this year when you double your money, okay? You can also take profit at a 50% point. So if you've turned 4K into 6K and you're happy with that 50% return in a short period of time, and that may happen in a month or two in May, especially if Nvidia has a big rise, or during the next earnings, if the stock has great earnings, then yes, there's going to be a big jump in the stock price, and you may see a really big gain on your LEAP option. Typically after earnings, then you can sell and take profit. You may be up 70% or 80%. That's fine, right? Thing is, with taking profit on a LEAP option, there's not like an exact formula or science. It's basically like after earnings, if there's been good earnings, good time to take profit, you can set a profit target of 50%, or you can simply just be patient, and the least amount of work is just aim for that double and just don't touch it until like later on in the year. Okay, here is the good part. Okay, now let's talk about the risk management and the potential bad part, because you never know, right? There could be some issues in the market, things can change, although unlikely for Nvidia that it's going to become a stock that's going to just be in a bear market. We've already had a pullback, and clearly that did not last at all. We had a pullback here. By the way, I was telling my community, hey, we got to jump into some LEAP options, some call options, and that has worked out tremendously well. Granted, I did do a bit of a poor man's covered call strategy, so I've given up some of my upside, but I'll tell you more about that maybe at the end. So look, here's how you manage the strategy for risk. If you buy in a call option, right? So we're buying the 120. This chart says 100 because it's part of the course that I'm about to release. But say that you bought it for 120. If it starts to go down, it has multiple down days, and maybe some bad news comes out, and the stock just goes against you, you do want to set a mental stop loss, okay? Not a physical stop loss. I don't believe in like physical stop losses because options are volatile. The bid-ask spread can change and widen on a day with lower volume, and then all of a sudden you can hit your actual stop loss accidentally. So instead of having that mistake happen to you, instead just set a mental stop loss and say, hey, I want to get out of the stock at, or out of this LEAP option at, say, if the stock were to crash down to 100. Again, not that likely, but if it goes down to like under your strike to 110, 105, probably want to set a mental stop loss, especially if you had entered this position with a bigger size chunk of your money, and now you're concerned, okay, I'm down a lot of money for the position that I made. Cut part of the position, cut a portion of the position until you are comfortable. Again, when I teach my one-on-one students, I'm not always teaching them like, hey, this is the exact formula. Although I do have like a blueprint, I have rules, I have core rules and stuff. I always encourage kind of self-intuition. So every single person understands their own risk, because everyone has a different retirement solution. Some people are higher risk, they want to hit a different number faster, while others are happy with a more consistent passive income, so their portfolio is going to look different. So set your own mental stop loss. It does take experience. Obviously, it's good to have someone in your corner telling you, hey, this is what's happening, this is what I would do. But either way, you have either my free videos here on YouTube, and understand that a mental stop loss is very important when you enter the position. It's like when you enter into a marriage, okay? A lot of people get prenups, some people don't. But it's probably smart, given statistics, to kind of think about, okay, if things go south, you know, how are we gonna deal with the kids? What are we gonna do here, okay? Just a little bit of planning. Same thing here. You don't want to do it when it's too late. So you want to be ahead. You want to plan ahead. You want to be proactive. Okay, that's what I teach and that's what I believe in. So be proactive, set a mental stop loss, and consider exiting the position. If it hits your strike price, that's when you basically start thinking about it. So yeah, this is a powerful LEAP strategy that you can 10x your money or more. I also do sell covered calls on it, and that will be in my free course that's coming out in just a couple of days. So we will talk about that soon. Make sure that you subscribe, leave me a comment, check out the description, and I will catch you in the next video. Hopefully you enjoyed this one.